Great. Welcome to Digital Asset News. Take a top stories in crypto, break them down into bite-sized pieces. So today, this is the big story. And we've been talking about this for a while, and finally it's going to happen. We've got Simon Dixon here from Bank to the Future, and he's going to help us understand what this is as far as a Celsius recovery plan. So we're going to go over a lot of things today, so just stick with us. The first thing we're talking about is who is Simon Dixon? Why is Bank to the Future, his company, even taking part in this? And a little disclaimer. Also, the big question, how do we get Celsius and users' money back? I think that's what everybody's here for. Also, we're talking about what have you done so far to try to help Simon and the company. Then we'll talk about what's a bad result, what would you consider a win, and then what's the next step? Because we can talk all we want to, but we got to take action. We got to take action fast, and that's what the plan is. And then we'll finish up with a little final thoughts, mental health, and we're going to take your questions that you submitted to Slido, which we have over 260 or 300 upvoted to the top one. So first one, Simon, first of all, thanks for being here. I know you recently lost a family member. I know it's a very tough time. So thanks for taking the time out to do this. This is going to help a lot of people. I really appreciate it.
Okay, yeah, obviously I really wanted to give this interview to you because I think, we did some interview about 3 months ago. Firstly, I just got to say, I've got like a lozenge in my mouth, if that makes an annoying noise. My throat is dead. This is not ideal conditions. I've been, mourning the loss of my father. But the DMs just got so heartbreaking that I just needed to do something because I knew I could. So, that's really the situation right now. This is less than ideal. That's really the precursor to this. But many people are asking for interviews, but I wanted to give it to you, Rob, because I think you've been doing the most for the community. And I think it's deserved.
Well, I'm trying, my man. I'm trying. And then also, I just want to say to everybody that we've got 3 screens up here. We had a little issue technical. So you're going to see the video of Simon as he's hanging out in the nice background. And then the audio is coming from a better source. So Simon, let's get down to it. Your time is valuable. My time's everybody's time is valuable. Who are you? Who is Simon Dixon? And why is Bank of the Future taking part in this? And any disclaimers you want to throw out there before we get going?
Yeah, sure. Okay. So I gave really an overview of me, the past, present, and future of Bitcoin. I was involved in Bitcoin from speaking at the very first Bitcoin conference in the world, writing the first published book in the world to include Bitcoin over a decade ago, Bank to the Future. And before my life kind of went into turmoil recently, I was writing my next book on the future of finance and surviving the Great Depression of the 2020s. And so the reason that I'm here and talking about this right now is because I am a shareholder in Celsius. The company that I co-founded, banktothefuture.com, is the longest standing company in Bitcoin, and it's the world's first crypto securities business. We funded over 100 different companies from Kraken, Bitfinex, Bitstamp, Coinbase, blockchain.com, Circle, some of the largest names in the industry. And we also did a funding round for Celsius, the Series A. So that was really my first involvement. What I do want to say in everything that I talk about today, firstly, I'm not actually a lawyer, but I paid tens of millions to lawyers over the years, surviving every single regulatory crackdown that we've had so far in crypto over the last decade. But I'm not actually a lawyer, so you can't take anything as legal advice.
Right.
I'm not a financial and investment advisor. I have done all my qualifications. I used to work in investment banking. I was actually a qualified financial advisor, but I'm no longer registered to give investment or financial advice. So nothing that I say, in my opinions, about what I'm saying, it's about purely what do I want for my deposits at Celsius and my shareholding at Celsius. There is going to be tax consequences in what happens here. I'm not a tax advisor, so I just got to say that. Right. And I don't work for Celsius. I was offered a role on the board of Celsius, but I am not a director of Celsius. I'm not an employee of Celsius. I am, I believe, from my understanding, one of the top depositors at Celsius. I've always taught diversification. Approximately 3 years ago, I released a video series on retirementplanb.com where I shared live how I'm investing because I was forecasting a Great Depression. Everyone thought I was crazy back then because the market didn't go into a depression. But I was trying to prepare everybody for inflation, deflation, economic decline, economic growth, bank failure, wars, pandemics, and how to be okay, whatever happens, including crypto. And Bitcoin bear markets. So part of how I invest is diversify. And so I try to prepare for all outcomes. And one of my strategies is yield. So I had a percentage of my wealth on Celsius as part of my yield strategy.
Right.
And I published, the rewards that I was receiving to be transparent about that. And I also own shares in Celsius. So when this disaster happened, I was forecasting a yield and DeFi crackdown, and letting people know that the next boom market from this, after a yield and DeFi crackdown, would probably be a securities boom. And that happened sooner than I thought it would happen. And obviously my deposits were on the line, and my shareholder value was on the line. And I knew that I could try and do something about it. And all of a sudden, the direct messages just started coming through, and they were heartbreaking. I started to realize that people had actually put their entire life savings in Celsius.
Right.
And people were dependent upon Celsius for their retirement and their financial future. And while I cannot do anything about that, by the end of this, I'd like to really give some tips from someone that's been completely broke, somebody that's lost their life savings and retirement in the past. And I'd like to cover some of that as well. But really the main topic I'd like to cover is what can we do about Celsius? So who I am, I'm a depositor, I'm a shareholder, I'm involved in the industry. I deeply care about this industry. I do believe that Bitcoin is going to play a huge role in the future of finance. And I do believe we need an exit from the traditional financial system. I lean more to Bitcoin than alternatives to Bitcoin. But I also diversify in order to prepare for any outcome. And one of the outcomes that I need to prepare for is Bitcoin failure. And so that's one of the outcomes I prepare for. Even though I don't believe it will happen, I always invest in maybe me being wrong.
Gotcha. Okay, so that covers the big stories or the big parts of it. Who's Simon? Why are you guys involved? And a little disclaimer. So now let's get to the bigger question. How do we get the Celsius users' money back? You got a bunch of DMs, I got a bunch of DMs, messages, heartbreaking. And we talk about only investing what you can afford to lose, never leaving too much on any one exchange. We have the rules right there. But people get ahead of themselves. We're human, right? So now we got a lot of people stuck. Simon, how do we do that? What's the plan going forward? So how does this all work out for Celsius users, depending if you got 3% like me on the portfolio of their portfolio on Celsius, or like 100% like some people?
Yeah, okay. So the first thing is we can look back in history. Having been involved in this industry for over a decade, we've been here before. So the first time I experienced this was when I spoke at that first Bitcoin conference. It was sponsored by a company called Mt. Gox. And Mt. Gox had pretty much 70% of all the tradable Bitcoins on their exchange. They tried to get they created a bull market, and they created a bot to try and trade their way out of a hole, because Mt. Gox purchased an exchange from the creator of Ripple. And that exchange was missing 80,000 Bitcoins when Mark Capellas bought it. They then got hacked, and they were missing a lot of Bitcoin. So essentially, they became inadvertently a fractional reserve bank without having a license to do so. And so we've got that experience to go by. What we do know is that they did a few things right and a few things wrong. Some of the things they did right is that they didn't sell the Bitcoin. They kept the Bitcoin. And it moved into bankruptcy and liquidation. And 8 years later, there is $1 billion of Bitcoin. So it went from being bankrupt to having hugely valuable assets in dollar terms. And it's still at this moment being resolved 8 years later. And a company that I invested into was a small startup at the time called Kraken. And Kraken was the company that put together a plan with the liquidators in order to try and unwind and support all of the depositors in seeing what they could recover and what the financial situation was. So that was wave one. That took us from Bitcoin, up to $1,300 and crashed us right down again to $250. Then we had a sideways market where we tried to reconcile that, and we moved into another one. The other situation that I was directly involved with was we were in a sideways market in 2016, and Bitfinex lost 119,000 Bitcoins as a result of a hack that was recently recovered from the Crocodile of Wall Street. You can follow that story. And the situation there was that they didn't want to follow Mt. Gox. They learned from Mt. Gox, and they put together a plan that we were involved with that we can go a little bit deeper in.
Yeah.
Where they haircut users, they gave them a token, and that token represented a debt. They traded their way out of the issue. They repaid some of the debt, and people converted it into equity, which later went 16 times up on banktothefuture.com and paid out hundreds of millions of dividends. And they got a right to all of the billions of dollars of Bitcoins that was later recovered many years later in this year, actually, 2022. So Bitfinex used financial innovation, and really it was comparing those two different stories. And people get this confused as well, because Bitfinex had two disaster recoveries. We did the equity part of that. The second one was when $850 million was seized by the government from one of their banking partners for Tether. And they had to issue $1 billion of a token in order to recover the funds that the government had seized as a result of that. And that was the Leo token. So people get confused. The first recovery for Bitfinex was called the BFX token, and we can go a bit deeper into that. The second one was called the Leo token. They both worked, and they both recovered as a result of it.
Perfect. So yeah, let's dive deeper into that, because there's a big distinction between what happened with Mt. Gox. They kind of went a TradFi way, got a bunch of lawyers involved, and now we're 8 years out. 2014 hack, I believe, right? 8, 9, 10, 11, 12. So we're coming up on a decade, and we're still in flux. But now we're talking about Bitfinex and how it works. So walk us through those distinctions you just talked about.
Okay. So Mt. Gox went into bankruptcy, went into years and years and years of lawyers, paying lawyers millions, TradFi route. And eventually the price of Bitcoin went up because there was one very fortunate thing, which is that the way that the proceedings worked in Japan meant that they didn't have to sell the Bitcoin. Bitcoin went on a bull market for years and years and years. It was a forced hodl. There was hard forks with Bitcoin Cash and Bitcoin SV and all these other ones. So they were able to sell off some of the hard forks, and they kept the valuable asset, which was Bitcoin. Now, the liquidators played it very well. If you move into bankruptcy proceedings, essentially, you're relying upon TradFi's belief in Bitcoin.
Right.
And traditionally, they are very risk adverse. Now, Japan was the only country in the world that was supporting Bitcoin regulations. It was the highest level of merchant adoption in Bitcoin. And it had a very different mindset, without being stereotypical, but, they have 100-year games plans versus 3 to 5 year game plans. Yeah. And that was a stroke of luck that made that work, but it still took 8 years to get the funds back. Okay. Yeah. So that was number one. With Bitfinex, they had to move really fast. And this is my original approach to Celsius. And I'll go through what we actually did and how we approached them.
Okay.
You have to move really fast, because the longer you go on, the more FUD comes out, the more bad PR comes out, the more predatory offers comes out, the more the community stop believing in what they originally believed in. So to give you context, from the moment that Bitfinex was hacked, they were immediately the enemy of the world. Everyone was, give me my money back. They were scammers, take them to prison, all of that stuff. But they set about releasing, after 2 weeks, some press around what they were going to do. Within a couple of weeks after that, they executed it. And essentially, every advisor would never have advised them to do what they did, but they decided we have to find a way or make a way, and they did it. So here's what they did.
Okay.
They realized that, so they took the value of the Bitcoin, 119,000 Bitcoin at the time was valued at $72 million. Now, $72 million compared to hacks that happen today is a reasonably small number, but back then it was a disaster number.
True.
72 million in our industry back in 2016 this is before the ICO boom. This was a big hole, a really big hole. And what they said is that $72 million is the value of what we can't repay. So they opened up, they allowed for trading, they allowed a bunch of people to withdraw and get the rest of their money, and they were haircutted by about 33% of their deposits. What they did is they then issued a token, and that token was called the BFX token.
Okay.
The BFX token was essentially a security. It was a promise to repay $1, and there were 72 million tokens. Those 72 million tokens, you could either sell them on the market if you thought, I want out of this shit, I don't believe Bitfinex, I think they're a bunch of scammers, I'm out. And so you could sell it, and immediately it started trading at about 30 cents on the dollar. But somebody else said, I believe Bitfinex can recover, I'll buy that $1 of debt for 30 cents. And so immediately that's what happened. This is very different to just issuing a token like Luna or something like that. This is a security, it represents a debt. And in accepting that token, you had to agree not to sue Bitfinex. So if you wanted the recovery, then you had to give up your right to sue. And most people accepted the token and decided that that was the route forward. Speculators came along and said, well, I'll buy it up. I believe that Bitfinex has a future, and it became a prediction market for the likelihood of Bitfinex recovering. Now, as the 2017 bull market came along, a stroke of luck came along, Tether started to get traction, Binance was launched, and Binance didn't have any banking facilities, and it used Tether as its pretty much a crypto-to-crypto exchange.
Right.
And Binance became huge because it didn't need to get banking and essentially used Bitfinex and Tether as their bank account, which led to the later issue that arose the second time round. But anyway, Binance grew because of that they didn't need a banking, and Bitfinex and Tether took on that responsibility. The market recovered, they started paying down the debt. They also said, if you want to convert your token, no matter what the price of the token is, even if it's trading at 30 cents, we'll give you $1 of equity at a set valuation in the company. And so we launched a pitch on Bank to the Future, and Bank to the Future is a securities company. And so people were buying tokens at 30 cents and converting them to $1 of equity. So they were getting a 70% discount on the valuation of Bitfinex. Now, as more and more people did this, they were buying it for 30 cents and then converting into equity at $1. The price of the token started to come up. It went to 40 cents, it went to 50 cents, it went to 60 cents. And more people realized, and then they started repaying more of the debt. And then approximately $50 million, about 55 million, I think the final number was converted into Bitfinex equity at $1, and people could either buy that at a discount, and they got a deep discount in the valuation of Bitfinex.
Gotcha.
This created that prediction market, allowed people to make their choice between a token, debt, or equity, and then the 55 million that was converted to equity went on the Bank to the Future secondary market. The $1 went up to a price of $16 when it hit at this peak on Bank to the Future. So there was a 16x upside on the equity. And there was also, they took all of their profits from the whole bull market that happened in 2017 and 2018 and paid it out in dividends, which was, to the tune of hundreds of millions throughout that time. And they also gave people the right to, if the hack funds were ever recovered, you would get your piece of that. And that was really the first recovery story. It worked well because people acted fast, people were given choice, and the market recovered.
Gotcha. Okay, so that's a good lesson as far as like the history of what's happening. So then that leads me to, actually we'll have to back up and kind of talk about that. So are these the ideas that you guys are having to move forward potentially with Celsius? And not that this is actually happening right now, of course. There's a lot of things in talks or in flux, but is that some of the rationales of what you're trying to do here? Or you would just put out a Celsius recovery plan and it was all about the 3 proposals. So do you want to get into that now, or do you want to just give like a brief overview of how the Bitfinex is or is not some of the proposals you're trying to do now with Celsius?
Yeah, so when we were putting proposals forward, we knew that, so there was a few things. Firstly, we thought traditional finance are going to take it down the Mt. Gox route, but they might take it even worse. They might sell the Bitcoin. They might sell a lot of the cryptocurrency, causing a further crash in the market.
Yeah.
They also would take a risk-adverse approach. So there's 3 issues with Celsius that we were trying to find solutions for. The first is disclosures. So the challenge that I was putting forward is that Celsius was sold in the wrong way from my perspective. It is my belief that the yield product is a security. We know that because BlockFi just settled 100 million with the SEC, and all of the yield platforms, there's no were in challenges around whether there was publicly disclosed things. Here's the challenge with this: we were working on their funding round. NDAs have been signed. I'm trying to make sure I give as much information as possible, represent the right solutions, without breaching some of those NDAs and creating legal trouble for myself. But sometimes you just got to go for it because the consequences are too disastrous if you don't go for it. So that's the situation. So disclosures. I believe that the yield product is not a low-risk savings account. It is a high-risk security. And that became apparent when the bull market ended. And so many people took money out of their bank, bought stable coins, thinking it was a different type of risk. So it's not a low-risk saving account from my perspective. So I believe that was sold in an incorrect way. And instead, it is a higher risk security. That means that when you invest in a higher risk security, you need to comply with securities laws. Now, people hate compliance, they hate laws, they claim me of being a lover of regulations and all sorts of stuff. There's only a reason why Banks of the Future survived the decade, is because I personally believe there are good regulations and bad regulations. Good regulations are investor protections. So when you're dealing with a centralized company, it's good to have checks and controls on that company, because there's all sorts of things we have to do. Liquidity requirements, audit, transparency, all sorts of things that are involved in investor protections. Other things are suitability. Anyone that signs up at Bank to the Future, we have to test that they understand the product. They have to actually pass an online quiz showing what happens if they issue more shares. What happens if I lose my money? Should I be investing in all my money in one thing? So you do a suitability. None of this was how people invested. So I believe that they had a deep misunderstanding of the product. And so disclosures, transparency, all of those things need to be addressed, because is this a security or is this a savings product? That's a question that needs to be answered and addressed if there is a recovery. The second one is regulations. So Celsius was originally started as a peer-to-peer system. They said, you put your Bitcoin in, and then we'll take that Bitcoin and we'll lend it out to somebody else and we'll pay you the yield. That was the peer-to-peer model. In having that model, there was a reason why it was a peer-to-peer system, because it's treated differently from a regulatory perspective when you do peer-to-peer. If you then start making investment decisions, it's more like a security at that stage, because you're investing in the ability for a fund manager to make investment decisions. But every bit of money or crypto that goes into Celsius, if it's backed 1-to-1, then it's more a security at that stage. If, however, it's not backed 1-to-1, and some money got hacked, for example, that's the Mt. Gox scenario. At that stage, you're engaging in fractional reserve banking, and you need to have a banking license in order to be able to, lend out more deposits than you have. It evolved, as it were, what it seems, from a P2P model to a securities model to what looks like a banking model now, and therefore there is regulatory consequences. Now, What we saw with BlockFi is that they settled with the SEC, and they said, we're going to turn this into a security, which would imply that it's back 1-to-1 and it's not engaging in any kind of fractional reserve. If there were funds missing, and then it's a liquidity issue. So sorry if I'm dumping a lot on you, but there's a lot to cover.
Yeah, we got to go over all of it.
Yeah. So really, there's 3 ways of solving that, right? Either it's illiquid. If it's illiquid, then my perspective, again, not financial advice, is just wait it out. Hodl, wait for the system to unwrap itself. SCETH converts to ETH when it moves to proof of stake, and you just simply wait it out. And unfortunately, there's reputational damage.
Right.
There's financial anxiety in the time that you haven't got your deposits. There's lots of lessons learned. But if it's illiquid, if nothing major happens with those investments, then eventually you should be in a position where you can slowly withdraw some now, more funds come in, withdraw more funds come in, withdraw more. And that's really the illiquid solution. There's a difference between illiquid and insolvent. Insolvent is when you actually don't have enough deposits to meet all of the demands, in which case everyone that's demanding for Celsius, give me my money back, there isn't the money there. And so you really have 2 ways of dealing with it when you're in an insolvent situation: Mt. Gox or Bitfinex.
Right.
And those are your 2 choices. You either say, I'm out, we move to bankruptcy. And then TradFi, lawyers, advisors all take over, and the board no longer have any decision making in that process. Bankruptcy is that solution. Insolvency is where you say, I believe we've still got something that we could do as a board. And so my job was to try and get those solutions in front of the board while they could still make that. My belief, speculation. I'm not a board member of Celsius. I'm not privy to the inside conversations. I believe that the board wanted to do a recovery. I believe TradFi wanted to take the conservative route. And I believe that's all based upon, not buying into the ethos of the crypto industry, not buying into the future of Bitcoin, trying to protect from certain issues and challenges, and really not the right things. So when we launched the webpage, which I think you'll be sharing in a bit, we tried to articulate some of these thoughts around belief systems become important here. I did not want my deposits to be put in the hands of TradFi and bankruptcy proceedings. I thought it was best for my deposits to actually do a combination of an illiquid solution for the assets that are liquid, and a financial innovation solution so that we can benefit in a very high risk way, like the Bitfinex, from any upside of what's left over. In order to do that, it required regulatory transparency, financial transparency, a willingness to move fast, to act fast, and to communicate and put PR there about the actual recovery plan. So this is when I came out. So what did I actually do? I was mourning my father's loss. I publicly said, I'm no longer creating videos. I've got other things I need to deal with. And so when I realized that this was happening, I silently said, right, you've engaged these advisors. I'll tell the advisors what I think they should do. And so that was my first approach. And I hoped that that was going to lead to something. When I realized that that was not leading to something, I then said, we can do it. Engage us to do it. We've done this before. We've got the experience. We'll take our entire team and put all of our efforts into doing what we think would be the best solution that we could come up with. We had a belief that our shares were worthless if depositors were not given a good solution. So our solution was focus on depositors, and then there'll be shareholder value. And if there's shareholder value, I don't own the tokens, then there may be token value, but my priority was depositors first, shareholders second, and then if there is a company, then the token might have something to do with that. That wasn't really my priority.
Gotcha.
And so, yeah, that was, I wanted to avoid bankruptcy for that reason. So that was my advice. Now, when I realized that we weren't really getting anywhere, I started to detect speculation again, that there was a bit of a power play between what the board wanted and what the advisors wanted and what TradFi wanted. At that stage, I decided that the only thing I could do here is go onto Twitter. And when I went onto Twitter, I wanted to harness the community to let them know that there are solutions and that we need to unite and put more influence and pressure, because we have over 5% in the company, and we can call a shareholder meeting and force a vote. Again, not legal advice. We just believe, I've been moving as fast as we can, that we could use our shareholding in order to force this. And this is when I started to get an offer to become an internal member. And then I took the opinion that me being an internal member meant that I'd have to go silent. I wouldn't be able to support the community in the way that I'd like to support it. It would give me less influence to do what I thought would be right for depositors, which would then retain some shareholder value. So that was the point when I decided to go public and go on Twitter. And everybody was asking me, who the hell is Simon Dixon? What axe has he got to grind? Is he, a troll, an insider? I'm okay with all of that stuff. But I then decided I've got to go on digital asset news. I didn't want to do any videos. I wanted to use this time as downtime, but the community called, and the DMs just broke my heart, quite frankly. There is a human element to this.
Yes.
People were contacting me saying that they're suicidal. They don't want to tell their partner that they've lost all their life savings. And then really at that stage, it kicked into me. I have to push to the final hour and do everything within my power and influence in order to try and come up with a better solution. And that's where we are right now. I'll push to the final hour. We have certain tools, we have certain influence, we have a team of people. We've completed a year of due diligence because we were about to launch the Series B funding round for Celsius. It didn't get quite past the due diligence because of this, insolvency or stroke regulatory stroke liquidity issue, and that started to happen. And so, and people were asking us, why is this taking so long to do the next round? Well, there were these challenges, and and the stars and the moons were all lined up, and now everybody, I think, gets a bit clearer. I do also want to say that it's a very, very challenging thing for the board. It's not my job to judge here. My job is to come up with solutions. There's many things that the board did that I wouldn't do, but that's not for me to judge. I'm just here to try and get the best result that I can give, and use my experience to do what I think is best. And why do I care? I've got tens of millions on the line in deposits. If I lose those tens of millions, honestly, it won't make any difference in my financial position because I prepared for that. But there are people that have all of their savings, and that breaks my heart. They need to learn the lesson. And at the end of this, hopefully they can come out a wiser investor. But however, if we could do something to prevent that, that's why we're on this call right now. And so it was the human element that kicked in that made me want to come out.
Yeah, and that's huge. And then the big thing right here is, I will just say this before we move on to the next part, is the experience. So because you've had that experience with the Mt. Gox, with the Bitfinex, you can say, look, I can tell you what doesn't work, and I can tell you what can work, and I can tell you we can do a hybrid, or we can take a look at a new approach. And we're going to talk about that in a little bit as far as the three proposals. So to me, it makes a lot of sense. And that will kind of answer, how do we get the users' money back? We'll talk about that. And then what are we doing so far to try to help? The human factor makes a lot of sense. So here's the next question before we get to, the proposals and what we can actually do. What's a bad result here? And what would you consider a win? And that would be a win for, like you talked about, the depositors, the shareholders, the people involved in Celsius, and also crypto in general. So what would be something to be positive? What would be or what would be just a big, bad negative?
Yeah, so from my perspective, and again, I'm talking from my deposits and not from your deposits, you have to make your own decision about what's right. And we'll have a way where you can express your opinion about what you think is right for you. But from my perspective, the worst result for my deposits would be that bankruptcy takes over.
Okay.
They sell all my Bitcoin, and they sell it at the bottom of the market. They create further downward pressure on prices. Right. From people that have no belief in Bitcoin. And then they take whatever decent asset Celsius has left and sell it to Goldman Sachs. That would be my idea of a worst nightmare. Now, I did do some, again, I know many people at Goldman Sachs. When the Goldman Sachs rumor came out, I asked all my contacts at Goldman Sachs and the people from the relevant departments, and I tried to bust that as just misinformation, because all of the people that I spoke to at Goldman Sachs that will remain unnamed said that it was just FUD. It was just, there was nothing to it. So I take that for what it is. It doesn't mean that there's not a secret team working on this, or, I just take that for what it is. I try to bust that FUD. But I do believe that traditional finance want to get into this industry, and those that have banking licenses are perfectly positioned to take all of the decent assets. And as somebody that's been on the other side of many of the conversations that are happening with deals related to, I've got to be careful what I'm saying here, but there's many companies that have challenges right now. And I've been on the phone nonstop, and my team has been on the phone nonstop with all those companies and all those investors and all those people that are putting in solutions. There are really predatory solutions that are being offered right now, and I don't like them at all. And so I want the reason we put this whole hashtag depositors first. I'm a karma guy. That's how I operate. I believe, Alex said some good things. I mean, he always used to say, do good or something like that. Don't quote me on what he used to say. But I actually do believe in that philosophy. That it does, what goes around comes around. So that's the worst result. Traditional finance assets strip it, depositors get left with all the shit, and they sell crypto at the bottom of the market and create more downward pressure. It doesn't mean that they're going to do that. There is a scenario, as we saw with Mt. Gox, where they don't sell the crypto, and I hope that I'll use my influence if it goes into bankruptcy to try and push for that. But that would be the worst result.
Yeah.
The best result is that we transparently say, okay, this is not illiquid, this is insolvent. It's insolvent, here's the hole.
Okay.
And we put together a way for people through time, an illiquid solution for people to gradually and slowly withdraw their deposits as investments unwind. And then a solution, a high risk, a speculative solution using securities is put together for the whole, to try and see if you can recover those funds. And there is still a company at the end of this. And the company at the end of this is either Celsius is a tarnished brand and a tarnished board, and therefore they hand over to another board and a brand that can take this on, that can deal with the regulatory challenges, securities, banking, whatever this is at the end. And there is an upside in that business opportunity that takes care of the whole, and some kind of merger, some kind of acquisition, and those types of solutions are put together to try and make depositors whole with the best effort, team that can do that.
Gotcha. Well, you know what? So let's just get down to brass tacks and talk about what that entails. So that's going to be the next step. This is where we take action. Talk is great, but talk is cheap. We need to do action. So here's what has been given to me. So there is this website. There's a link in the description. It's Bank to the Future, BNK to the future.co/Celsius. Again, you don't have to remember that. Just go in the description, click the right one. And there's 3 proposals. This is what the team has come up with from Bank to the Future. And Simon, I'm going to need you to walk me through this as we talk about each one. So here's the first proposal. This is a restructuring to relaunch Celsius and allow depositors to benefit from any recovery through financial engineering. This involves risks, and full recovery of funds is not guaranteed. I'll go with all 3. A pool of the most influential whales in Bitcoin to co-invest with the community. That'd be pool number 2. This is see the previous series, a fundraise when we complete it for Celsius here. And proposal number 3 is an operational plan that allows a new entity, which we just talked about, and team to rebuild and make depositors whole. This again involves risks and full recovery of funds. So let's talk about this very first one here, a restructuring to relaunch Celsius and allow depositors to benefit from any recovery through financial engineering. What does that look like? What is a time frame? And what kind of risks are we talking about?
Yeah, so in terms of time frame, let me check. I got 20% battery. Hopefully that's not going to
We should be good.
Yeah. In terms of time frame, that's 100% dependent upon the board and the advisors and the internal fights that I'm not privy to at the moment. So that's the first solution, which is Bitfinex. The brand survived. The brand had a lot of damage. The brand recovered, and financial engineering was used in order to make depositors whole. My fear is that we've come too far for that solution. That was my first solution of act fast, communicate, put out press, tell people the whole, do the haircut, suck it up, and put together a plan and act fast.
Gotcha.
So that was proposal one.
Gotcha. So let's move down to pros. And it sounds good. Get in front of it, put out the fire, move forward, FUD's coming, make sure you stamp that out. Here's the the second one, a pool of the most influential whales in Bitcoin to co-invest with the community. Previous Series A1, and you talked about Bitfinex in 2016. So talk to us about that, timeframes, those types of things.
Yeah, so you take the same approach in part one, but immediately I got on the phone I've spent the last 11 years being a shareholder in many of the most influential companies in the Bitcoin and crypto space. I got onto the phone to as many of those as I could and said, would you be interested in participating in the recovery? It's not going to be a predatory one. It's going to be one that gives upside, reasonable valuation. And if you start investing, then we could see what we could do. So with the Bitfinex one, when there was 55 million, initially it was the big whales that came along and said, okay, we'll convert junk. And that gave confidence. And then the smaller people came along and we gave them a solution. We had a pitch on Bank to the Future. You could spend those tokens, convert them to equity. So immediately we had a bunch of people that wanted to participate in that. What I did find is that a lot of, there were some that were interested if we had more financial information and a regulatory plan that worked.
Right.
And there were others that were like, well, we're already putting together a predatory offer. And so there were a bunch of those out there.
Gotcha. Okay. So that moves us to pros number 3. And this is what we just talked about. Operational plan, board gets reshuffled, put something in there with trust that allows a new entity and team to rebuild and make depositors whole. This also involves risks. What does that look like? Timeframes, if you got them.
Yeah. So again, this is somebody, so let's take, firstly, I don't give a shit if it's us doing the solutions or someone else doing the solutions. If somebody else can come up with a better solution for us that makes my depositors whole and my shareholding more valuable, then I'd back that. However, I do believe that Bank to the Future is in a unique position in that we already have a securities business. And for the last 2 years, we were working on how to do Celsius's business in compliance with securities laws. And we beta tested it with Celsius. And that was our retirement plan B portfolio builder solution that we were beta testing. If it turns out that there is no faith in the board, I know that there are a lot of people that still have faith in the board, solution one, proposal one, then great, if that's the solution. But if it turns out that somebody else needs to come along and try and get the shareholder value for the haircut, then we've been working on investment banking licenses. We've been working on a security solution. We have a competent team that's survived every single market like this. And we would be interested in supporting some kind of structuring that allowed the haircut shareholder value to try and get some kind of upside with the business that we built, or somebody else's business that's capable of doing that.
Gotcha. All right. So those are 3 proposals. Makes sense. We break them down into the easy pieces that they can be. So now it comes up to you. For everybody watching this video live, and of course the replay, this is where you come in. It's time for you to make your voice heard. So if we scroll down a little bit more, a little bit more and more, this is where you can vote and talk to us or talk to Bank of the Future about what you would like to see happen. You can submit it right here. The link again, banktothefuture.co/Celsius. You don't have to remember that. All you got to do is click on the link in the description and let your voice be heard. And that is the next step to take action.